Good morning, Wall Street winners. It is Thursday, November 7th, and what a day yesterday after the Republican sweep of the presidency, the House, and the Senate, or what looks to be the House and the Senate. There was a pretty clear message from Wall Street that seeing one party be the leader and hold power in all three of those, call them offices or entities, there was a celebration that took place, and the markets just took off and rose significantly, up in some cases as much as or more than 3%. The other thing that I find interesting is the VIX dropped or has dropped about 20 in the 20 mid 20% range in the last 5 days. So the VIX was in the low 20s. It's now down in the high 15s. It looks like it's in for 3.8% drop right now going into the day. So I find it very interesting that volatility has come down when I think we're just about to enter a period of increased volatility with this change to the administration and the potential for a lot of things to be undone, but a lot of new things to be put in place. So there's a lot of things in my mind to be on edge and at least concerned about with this transition of power. Some will be good and some will be bad, but hopefully the balance will weigh out and there'll be more good than bad. But when there is uncertainty, it often creates volatility, and I'm surprised to see the volatility index go up like that. So anyway, that's where we are in terms of the election results. If we think about what's happening today, we have the Federal Reserve coming out at 2 o'clock to talk about interest rates. We had ARM Holdings make their earnings announcement last night, and they beat on earnings, which is great, but they fell short on Q3 revenue expectations, and they're down just over 6% in the pre-market. TikTok was ordered to close its Canadian unit based on a national security risk. So that's an interesting turn of events that just may be one of Canada's ways of positioning their support for Chinese tariffs and their overall support for the U.S. administration, current and future administration's policies on China. So we're seeing some interesting turns of events there. If we take a look at the markets and the futures indices, all three of the U.S. indexes are up and in the green, not to the same percentage gain as they were before. But the one thing I want to caution you on is as much as markets can skyrocket upwards quickly, they can also turn and come downwards just as quickly, if not more quickly. So just beware that if these moves upwards are not supported by underlying fundamentals of stocks. Right now, this is all news and hope and really positive outlooks going forward. But if they don't materialize, those markets will correct and they will come back down. And that's where you don't want to get caught. So if you're in a position of profit, one way to deal with that is to take that profit and sell the position. But if you believe it could continue to go up, and there's certainly a possibility of that, then put a stop loss in close to or around the price it's at now so that you can still get upside. But if it comes down below your stop loss, it'll trigger and you'll get out of that position, and hopefully you'll maintain some of your profits. If we turn our attention over to the Yahoo Finance app, you can see here crude oil is down almost $0.75 today. So it's been on a very bumpy ride lately. We also have our VIX, which we talked about. It is down 68 cents, which is a big number in percentage terms. I mean, if we take a look at that, it's more than 4% in percentage terms that it's down. And if you look at the 5-day, you'll see the huge drop. I mean, we were up in the 21 to 23 range just within the last 5 days, now down in the mid 15s. It's a 28.75% drop. So that's a pretty big drop, and we'll see whether that can be maintained at that level. Then we get down into our list of stocks. So starting with health and retail, we've got Costco, which had a good day. It almost broke the $900 barrier yesterday, but it fell a little bit short. It is off this morning. Lulu was off yesterday. It's up this morning. Dollar General took a big dive yesterday, over $4. It is up slightly today, but nowhere near recovering what it lost yesterday. Another big loser yesterday was Home Depot. Looks like it's going to recover a little bit in the pre-market, but this is a stock that has earnings coming out next week. So it'll be very interesting to see whether consumers are spending, I'm going to call it in the DIY space, and making improvements to their homes in lieu of potentially selling and moving, because interest rates are still rather high. I mean, they've come down a little bit in the US, but they're still relatively high, making it more expensive to get a new mortgage when you make a move. So maybe investing, if you do have some disposable income, investing that in modernizing or making changes to your existing home may be a more conservative way and more financially acceptable way to deal with that. So we'll keep an eye on Home Depot next week. We've got the healthcare companies. HCA got hit hard yesterday, but Humana had a great day, and both are looking like they're in the green to start. JB Hunt had a great day yesterday. I'm not sure what's driving this, because if we do see Trump enact tariffs, that should hurt imports potentially and drive up prices, ultimately potentially hurt the consumer, because tariffs are effectively a sales tax on goods. It may increase inflation, but usually to increase inflation, you have to have ongoing increases, not one-time increases. So that we'll have to wait and see how it plays out, how he implements the tariffs, and whether they're staged or whether they're one-time, or whether they're just a negotiating tactic. But seeing JB Hunt up like that when I don't think consumer spending is increasing at that level, that's interesting. And so is CNR going up. So we did say CNR was a good buy at 150 just a few days ago. You would have done quite well, a 3% uplift there if you had to pick that up when we recommended it. Up at 156 now, but really not certain why it's benefiting, other than just all stocks rose for the most part yesterday with the news of the election. Then we get down into oil, and I do expect oil will continue to have a positive day and positive months going forward, leading into the change in the administration in the White House. I do expect as well that crude will probably start to climb at least to the mid-70s, so into the 75 range. But I do expect it'll get closer to $80 a barrel by the end of January when we start to see that transition in the White House. We do have some results coming out today, I believe, from 6 days for Helmerich and Payne, or HP. We do have another company. Is it Devon? Somebody is reporting today, and it's just slipping my mind here as to who it is. But we'll come back to that. But one of the oil companies is, I think they're reporting today, so we'll hear what they have to say and what their earnings look like. We get down into tech, and Nvidia it's definitely turned the corner from a month or so ago when it dropped, and it is coming back after its last earnings announcement. It fell, and it has slowly come back. It's now really surpassed, I think, its high recently, and I think it's going to continue to move forward up to November 20th when they announce earnings again. So you can ride that, get on that train and ride that upwards with NVIDIA or with NVDL, and get into that ETF, and which is NVIDIA focused. You've also got CrowdStrike having a great day yesterday. CrowdStrike has their earnings coming out on the 26th of November. They'll be one to keep an eye on, see whether they've made a recovery from that global outage that they dealt with. Palantir, just a rocket ship, it up $4.40 yesterday. That AI-driven organization seems to, and it now included in the S&P 500, it just is having an amazing year. If you take a look at this year to date, it's up 223% year to date. So that's been an incredible buy and hold in that case. Apple's coming down a bit. Apple I'm concerned about right now because of its manufacturing in China, because of its sales drop in China with the iPhone 16 or not meeting expectations. I'm not a huge fan of Reddit. I've said that before, but they've done very well. They're up significantly. I mean, year to date, this company is up 163%, but the revenues are fairly insignificant in comparison to a lot of the other social media companies. So giving them this kind of a price earnings multiple, which I don't even know if they have earnings based on this, but it just seems a little out of whack with reality. Palo Alto, again, it was up yesterday, had a great day. It's 13 days out to earnings. Looks like it's off significantly this morning, so not sure what the cause of that one is, but we'll keep an eye on that. Cloudflare reports today after market, so we'll keep an eye on this one. I expect this stock could get up into the $98, $99 range after earnings today on a good earnings release. And again, that's one of the cybersecurity companies that we're a big fan of. And then we scroll down further. We've got Microsoft back in the 420s. I do think this will get back up into the 440s, 450s. So that could be maybe January by the time that happens. Could be sooner based on the way the markets are moving. ARM took a hit with its Q3 revenue forecast miss. It did beat on earnings, so that's a good thing. But the price to earnings on this is just way out of whack with reality, up at 353 times earnings. But definitely a volatile stock. I think it looks like it's going to come off that 144 number today by about $7. I think it's going to drop more than that at the open. And then we'll just have to see if when it finds a bottom, if it does start to rebound. Long term, I think it's a solid buy. But I'm not sure whether these price levels is somewhere where I want to get in for a long-term hold. I'd be more fearful that I'd get in the 135 range and it would drop down to the $80 range. So I'm staying away from ARM right now. In lieu of ARM, I would get into NVIDIA for sure. AMD had a good day yesterday. We've got Lam Research had an okay day yesterday. It looks like it's going to have a little bit of a better day today. I'm surprised this isn't a $90 stock at this point, Lam Research, but we'll see with what NVIDIA comes out with if it lifts Lam Research at all around the 20th of November. And then Tesla. Tesla, obviously, with Elon Musk ties to Donald Trump, it had an incredible day yesterday. Again, I don't know whether it's sustainable. So there's nothing that happened in the election that really, at this point, benefited Tesla or changed Tesla's fundamentals. If anything, Trump's potential cuts to EVs and EV tax cuts could hurt Tesla. So it'll be really interesting to watch that one play out, but I would not be buying into Tesla at those levels. The one that I'd look at to buy into right now is Meta. Meta dropped. It was one of the few tech stocks yesterday that was in the red. And there's obviously some concerns around Meta right now after the Trump win, but I think that Meta is really well positioned and is a strong buy, in my opinion, at the 572 range. I think that has the potential to catch up with the market today and potentially tomorrow and into next week. You can see NVIDIA had a great day, up almost $6 yesterday. It's up 11 cents this morning. Google as well hit above 178. Looks like it's going to get up into the 180s. Again, I've been predicting for a while that Google should be coming back into the 185, 190s. I think that's a solid investment. And then the other one that got hit hard yesterday was TSM. So still some fears around the U.S. being the U.S. military and now the new administration willing to support these non-U.S. nations in protecting them from what America considers the evils around the world. So China's potential invasion and takeover of Taiwan. So we'll have to see what transpires over the coming months and years. But I think at 193, this was a stock that just killed it on earnings. And in the short term, I don't think there's a lot of risk. I think they're still going to do very well and outperform. So grabbing this in the low 190s could be a nice little value capture going forward that you should see hit 200 within the next month or so. Remember, going into December and after the U.S. Thanksgiving, usually there's a run-up into the U.S. Thanksgiving, so that could be positive following the election results. And then there's often a pullback after the U.S. Thanksgiving, and then another Santa Claus rally coming into early December. SoFi was incredible yesterday. It almost touched $12 there, so it was up significantly. And then your big guys. So Raymond James up $14. That's huge. Way overvalued in my opinion at this case. So wouldn't be getting into that. JP Morgan up 25 at 247. Again, just based on the prospects of deregulation in financial services, which are still months away from materializing, if they materialize at all. So I think you're at a good point to get out of these right now before they start to fall back and get back to normal levels. I was fortunate enough to buy into Goldman pre-earnings, and I actually took a loss, actually post-earnings, the morning after announcement. And I bought it at a high. It dropped. It's been down ever since until yesterday. And then I cashed out when this thing jumped $70 yesterday. My short-term my intention to make a short-term profit turned into a swing trade. I held that down position and then exited yesterday in a profitable position, thankfully. But this isn't sustainable from my perspective at these levels. Morgan Stanley at 131. All of these, I think, for the most part, are overvalued, and I'd be looking to liquidate at least a portion. I liquidated all, but I would liquidate a portion of my holdings in those and wait for them to come back to more reasonable levels. If we take a look at earnings for the events calendar, what we have today, Halliburton was who I was thinking about, not Helmerich and Payne. So they released before earnings. After earnings today, we've got Affirm Holdings, one of our financial stocks that provides payment options to folks when they buy online. I'm staying away from that. I'm not a fan of that business model, even though it can be very profitable. Airbnb comes out today after market, DraftKings, and Net as well today. So all things to keep an eye out for. Next week on Tuesday, we've got Shopify, Occidental Petroleum, and Home Depot. So we'll be talking about those next week. Oh, and HP is next week. So I was a little off on the dates there and mixed up HP with Hal. So good luck in your trades. And if you're liking these videos, please hit the like and subscribe button and leave me a comment if there's something you'd like me to cover. Good luck.